Type 9.
What's going on, guys? Good morning. Welcome back to another pre-market live stream here with the Everyday Growth Advisors. I hope you're having a good morning. Yesterday was a pretty interesting day in terms of what we were expecting from the Senate hearing with Powell, and I just want to recap what happened there and kind of give you my thoughts on what I kind of foresee heading into this week. Remember, we do have jobs report coming out this week on Friday, not to mention next week is CPI data, plus we have quad witching week next week, which is going to be a pretty hefty week in terms of volatility. So we'll definitely be seeing more upward and downward movement here on the S&P 500 or across the entire market. Some couple of things that you need to understand about yesterday's session with Powell. I think mainly, obviously I was listening to the whole thing, and most of the Senate obviously are a bunch of idiots who don't really know much about the economy. They're just kind of people who have been elected to this position of office, and they kind of have to come there and ask questions and act as though they actually give a crap. But mainly, a lot of the questions that were asked were surrounding a lot of politics and things to do with the bipartisan relationships between both parties, Republicans and Democrats. Now, you know me, I'm not really into politics, neither do I actually like to be in politics or talk about it at all, mainly because I don't really care. I'm a hard, capitalist. I strongly believe, that efficient markets are really the only system that really work. And so yesterday's session was just another reminder as to why people who hold office shouldn't really get involved with the duties or question somebody who actually has experience within those markets. Now, funny thing is, Powell is not actually a thoroughbred finance person. He's actually a lawyer by training, so that's why he's able to answer questions so well and keep them pretty much satiated in terms of their their hunger for getting blood. But so a couple of important things stood out from his remarks yesterday. First being his comments and remarks about jobs and unemployment, which, I think majority of you, anybody who has been listening to this live stream for a little while, or if you're part of the EGA Discord community, or you're part of EGA tribe in some way or form, you've been following newsletters, you've been following anything that we've been talking about, we have been talking about unemployment being a very key thing that the Fed is eventually going to have to fall back on. And you would probably remember this I want to say 1 or 2 months back, when everybody was really bullish up here, and everybody was really bullish up here, in these extreme exuberant levels. I mentioned very clearly that the Fed can't really pivot so strongly now because the unemployment rate is still very tight. The labor market is still very tight, and that doesn't give much room for the inflation to come down. You see, the thing is, many people don't understand something about economies is that when the job market is very tight and everybody has a job, that puts a upward pressure on wages. That also puts an upward pressure on the hiring capabilities, right? So, when you're a hiring manager and, there are a lot of people looking for jobs and there are not enough positions to fill them, or rather, maybe there are enough positions to fill them and there are a lot of people looking for jobs, that's a very tight market. What happens is that people start commanding higher wages, and then that cost of those wages are passed on to the consumer. Not only that, people start earning more money. They start, buying more things. The demand side of things start to increase. That's where if supply side stays the same, then prices start to rise across the board. So that's what causes a lot of this sticky inflation problem that the Fed is facing. A lot of this is also obviously attributed to the energy crisis that's kind of going on. And obviously, it's not just one part of the market, right? There are various different faucets of the market that are causing or rather contributing to this mess. So yesterday's his comments about unemployment were very important to actually listen to. But I think there was one of the senators that kind of got it partially right. He was going like, so, if the unemployment rate is this, then we'd have to have inflation rate of this. And then if unemployment rate is this, the inflation rate would be this. And he just started extrapolating the data, which is not exactly the way, it really works. So he kind of was like, it was kind of like, yes, 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 yes. And then, oh, no, you lost me there. So he did point out the fact that if the unemployment rate went higher, then, a lot of people would be more at jeopardy for losing jobs. And, you have technology that's improving at a faster pace now as well. So that's also going to cause a lot of friction on unemployment if people don't really, get back into the groove of upgrading themselves. So there's a lot of different things that, were mentioned yesterday. Now, let's also talk about the most important thing, which is the thing that the news is fixating on. The likelihood of a 50 basis point rate hike in the next session, FOMC, which is going to be this month. I think that the headlines went a bit crazy yesterday, telling everybody, we're going to see 50 basis point rate hike, and the market's pricing that in right now. And, obviously, yes, the market is pricing it in, but will it happen? That's a different thing altogether. And so I feel like this is another setup for a nice, unexpected moment for the market where it's very unlikely that the Fed is going to do a 50 basis point rate hike after tightening so much, until and unless they want to risk breaking something in the system. Okay, 50 basis point rate hike was only done, I want to say, in the first tightening cycle, and 50 basis point rate hikes are a very quick tightening cycle. So if they do a 50 basis point rate hike this time around, it's likely to break something. That would be very bearish in my view. Okay. And so for me, and my personal view is the Fed can't do a 50 basis point tightening right now. They would rather do a 25 basis point, 25 basis point, 25 basis point, if that's really what the market's trying to price in. So maybe for the next 3 meetings, right? And so now the news is starting to cycle in all that bearishness so that the market can kind of push this down further back into the 39.40. And so then we can kind of get another bounce here, possibly to the upside again. Okay, so now we discussed a little bit of macro. Let's also go through some of the technicals here. As I've mentioned, we were in a downtrend, and now we've started to get into an uptrend here. And obviously, mentioning on my newsletter, I did mention if we weren't able to break above 40.60, then down back to 39.40 we go. 40.30 being the first retest. So now that we're actually firmly rejected the 40.30 and 40.60, then there's a very high likelihood that we go for some kind of a double, triple bottom right here in this channel slash area that we're seeing right now. So let's have a look at this on a lower time frame, like a 4-hour time frame. And obviously, it's not very unusual to see waves down happen like this, or sorry, a wave up happen like this. And it's not unusual to see a double bottom or triple bottom scenario before reversal ultimately to the upside. So this market will actually get you caught in the crossfire if you're not really careful. Now, after this big wave up, obviously a pullback was essential, and yesterday I sounded the alarm for the pullback levels to be two levels. The first level being 39.90, which we got there very quickly, and then the next level that I was looking at was 39.80, and we pretty much got to 39.80 as well. And we have found some demand at around 39.80. In fact, exactly at 39.80. The low of this candle was literally 39.79.2, right? So I think that was a really important spot where we could see a lot of that price demand start to come in. But today will be another session. I think Powell is going to be talking again round 2 with a different group of people today. And so this will be a different kind of a session today where we're likely to see a lot more choppiness. And if we do get another flush down, then it will be down to 39.40. This is the next level for us to go retest. Below 39.40, we can go retest 39.20, or even this from this local low here at around 3900, 3900 or 38.85. 38.85, yeah, 38.85. So those will be key levels for downside to watch. But honestly, on this pullback here, this is a really great opportunity to go long if you believe in the theory that the bear market is over, or if you're in the same camp as me where the bond market is not really signaling that hard that we're seeing further rate hikes. Now you can see the bond market actually barely made a move yesterday, despite the market moving down aggressively. Look at the bond market. Nothing really happened here. In fact, if anything, people started buying bonds, which is a very started selling bonds. Buying bonds, my bad, which is actually peculiar because you would expect the opposite to happen, right? And so since we have the whole bond market in reverse right now, it's a really interesting time to see things like that happen. Now, the dollar index, though, it's a completely different thing altogether. Yesterday, it broke out of this, very strong movement on the daily and on the 4-hour as well. Now, we've seen the dollar do this before, move up very, very strongly, and then sell very aggressively after that. So I wouldn't really pin my hopes very much so on the dollar going further higher here just yet. I think, it's kind of a wait-and-see approach here with the dollar. But remember, this is against a basket of other currencies as well. So there are other dynamics that play into the dollar index here, not just ultimately the fact that dollar moves down, equity goes up, or dollar moves up, equity goes down. There are a lot of external factors that affect this. Okay. Now, NASDAQ, very similar looking chart, but not the same as the S&P 500. You can see there was obviously a clear disparity. In fact, I think, tech pulled back less yesterday than its counterpart. So we saw tech actually much stronger than majority of the other sectors in the S&P 500, which yesterday financials lost the most. Second was energy. Even materials lost quite a fair bit yesterday of ground, and then real estate lost a fair bit, based on the data that they were kind of talking about. I'm still looking for a potential entry into short energy if I can get that, and I'll keep you guys posted if I do take something like that. But as of right now, I'm a bit, apprehensive to go for that short. So that's kind of all I have for you guys. IWM here, obviously, later part of the day saw a nice little push down. This has come down here 3 times now, and this has been a significant demand. Wouldn't be surprised if this kind of bounces off this level here. But if we do break below this level, that's a pretty strong break, and then you probably see IWM come down all the way back to 182. So 182 puts, if IWM firmly breaks below 186 with good momentum and volume here, I think could be a decent trade opportunity if we get that break. Small mid caps have been kind of a little sluggish here compared to the rest of the market in this entire wave up and down scenario. But I still do think tech is pretty strong, and that's good news, right? Tech being strong is good news. It's going to give the market some relative strength And I think the other sectors that are lagging are gonna, kind of fall behind in terms of what we see there. So financials being the main one, obviously, with rates being higher for longer, this was the most sold sector yesterday. And then real estate being the other one, which also is directly affected by interest rates. But don't be surprised to see, quick buybacks on these sectors if that happens. Be ready to kind of capitalize on that possibility. Right now, market cycling a lot of this bearish news, which makes me feel, a little peculiar. Something peculiar is about to happen. So we'll obviously see what actually happens. But right now, no obvious signs of anything. Maybe a slight temporal hedging, VIX being up 1.2%. Not really significant, to be honest. Not until VIX gets up above 24 or 26, something like that. And so that kind of continues. I took a kind of a debit spread on Crowdstrike with some 132 and 138 calls, I believe. I took a vertical spread here. So hopefully this one pays off. This morning they had positive earnings. Remember, if you are going to play earnings, make sure you do it smartly. Don't just dump all your money to naked options. You can always play the spreads, which will give you a much better use of your money, especially with the option chain like Crowdstrike, which had almost 140% IV yesterday. So I took advantage of the sell side to fund some of my expensive calls. Go ahead, put your tickers, if you have any, put it into the comments right now so I can take care of them right after I'm done. Microsoft coming back here for a nice pullback. If it gets to 251.60, 251.50, I might take a stab at taking some long exposure for short-term contracts here. Tesla, the bearish news continues to fall, and the hammer continues to sting here. We traded this one with the team yesterday on Discord, made some really decent gains on this one. I think close to like 65%, 55% on Discord yesterday. Just, didn't really need to press it too hard yesterday. This really paid off a lot yesterday, and so today it's down again on other news, and then also a downgrade by Bloomberg. So that's just kind of a few things that are going on there. Google also kind of maybe pushing down for a possible retest. So is Meta. You can see a lot of these breakouts that were kind of pushed out. They're obviously, market makers are obviously going to come back down to kind of stop some of these out, and obviously clear out some of this liquidity before the next wave to the upside. It's pretty obvious, these kinds of patterns, and obviously I could be wrong, but this is just my opinion, right? Just my opinion, my unbiased opinion. Okay. Baba, good to add some shares now. Let's see. Baba, let's see. Not yet, I think. If it loses this 87, what is it? 87, yeah, $87 level. This could fall significantly, and it's gapped down just a slight bit pre-market here, more than, it's at 1.5% down. I would give it a bit more time personally. But I mean, if you're adding shares for long term, it's not a bad idea to add some here, and then you can always add more later, right? You add like a little bit of a position here, and then if it goes further down, you can add more here. If it goes up, you add more here. You got to average, dollar cost average in this box, right? I did mention there's 3 spots you can add: 95, 87.50, and 77.76, right? So there's 3 levels that you can add. I would add if you get down to all 3 levels, right? Add some here, add some here, add some here. Never enter all your positions at the same time, guys. It's just, there's no way you're going to be able to time the market correctly or perfectly, okay? So NEE is still one of my top watches. SE also, this was really nice, 21% yesterday on the news of earnings. So this was an insane rally from SE. Honestly, I think at $40, this thing was quite a steal. So now that we're getting through this cycle here, another one that I'm watching pretty closely is CRM, falling wedge pattern. A lot of falling wedge patterns everywhere. This one hasn't broken out yet. So, a break above this 184 level, 184.16 or so, would be a nice little entry to go long. If you want to be more conservative, I'd wait till after 186 up here. So either break here, that could be that upside. All into the 189, Apple, if it rejects 152 today, could be a potential short opportunity. Apart from that, I think today might be kind of a sideways choppy day. Just my opinion, obviously. And then maybe we get a flush down to 39.40 EOD end of day. So I think that's kind of what I'm looking at. Any other questions, comments, or things like that? Just wanted to give you guys a heads up, by the way, for all of you that are here. Thank you very much for attending. Also, make sure you hit that like button and subscribe if this is your first time here. Welcome in, by the way. Just wanted to put it out there that we are going to be having a webinar on the 26th of March. And this webinar is going to be a webinar on the bond market, and also we're going to be talking about the correlation of bonds and stocks. We're going to be talking about how do you trade with a clear mind. I have some tips and tricks for you guys on how do you really manage your mindset while you're trading / investing. And we'll also be opening up the floor to a Q&A with me, so you can ask questions, bring all your questions about the market and things there. We'll obviously be doing a Q1 update. So it'll be kind of actually a 2023 market update, not really just Q1, but I'm also going to kind of just give forecasts there as well. The details of this webinar sign up will be posted in like 1 or 2 days on our IG. So keep a lookout for that. And we will have a sign up page for that so that you can get signed up and then attend the webinar when the time comes. I'm really excited about it. I'm going to be putting a lot of time and effort into it. So I really do hope that you guys will attend and share it with your friends and family, especially those who find the market to be a very daunting thing. Our job is to make it accessible and simplistic so that you guys can follow. So that's all I have for you guys. I see no questions. I see no comments. I see nothing else. So if that is all for today, we'll end this session here, and I will see you guys back on Friday for the quick pre-market again. I hope you guys have a good trading day, and remember, still 14 days are available for free if you sign up for our Discord. Click the link in the description and it'll get you there. So other than that, I'll see you guys on Friday. Take care and peace.